Welcome back to another episode of the Wealth Juice podcast. As always, it's your boys, Ryan and Corey here with another episode for you. Today we have an exciting one. We're going to take a walk down memory lane and walk you guys through the evolution of our portfolio, really how we built a multi-million dollar portfolio from one simple house hack. And what we want to get into is the power of two average Joes just interested in real estate investing, interested in financial independence, having an idea, banding together and building something from scratch. And it's just been an interesting evolution over the last 5 to 6 years, from the podcast, interviewing over 300 highly successful real estate entrepreneurs, to taking the lessons learned, building out our own systems, building out our own business, and investing the way they did. And I just think this will be a very fun episode. It kind of be fun for us to take a look back and see how far we've come. So I don't know if you have anything to say on top of that, Core, but I'm excited for this one.
Well, this is really just to show you what's possible, as opposed to bragging about what we've done. It's really, the goal here is, both of our goal, I feel like in the beginning, was one property a year for 10 years. I tell this to people all the time, people that either want to come into our community or I'm just having normal conversations with. When I started, I just turned 34. You're about to be 35. This was like 26, 27, maybe 28 when we started. And the goal was one a year for 10 years. So now we can look back and saying that we just got to, I think we're at like 95 units total. And again, when we say this, we don't own all of these ourselves, but that's actually like part of the evolution that I want to talk through. This started with a simple house hack. So when we say average Joes, I feel like we're now in rooms with people who, like, the average line has now moved up and we're like, oh man, like, we have to be better. We have to continuously strive to be better. But the starting out in the beginning, we didn't know anything. So we'll walk you through the journey. We're going to focus more on the evolution and then touching on, we actually closed on our latest project today. When this podcast comes out, it'll be a few weeks from now, but today in October of 2025. And then we'll walk through that project and you'll see the evolution of how we were buying, how we continue to buy, and then where we're at now.
Yeah, I love it. So take us through the first house hack. And for those who might not know the phrase house hack, just explain what that is and how you got in the game first. I saw what you were doing and we joined forces.
Yeah, so we put up a post on Instagram like a week ago, and it went viral. I mean, viral for us right now is actually a lot bigger than it used to be, but I think 300,000 people saw it. And it was talking about house hacking and then moving each year and buying a new house hack. And about 90% of the people loved it. And then there's this 10% that's giving us so much hate. And they're like, why would you share a room? Privacy, all this stuff. And it just made me think that this game it's not for everyone. And I think that's something important to notice, because everyone's saying, I need privacy, I would never share a room, I can't believe this. But if you're willing to even just do a duplex or a triplex and live in one unit and rent out the other units, you don't have to share a room, you don't have to share living space, and it can change your financial future. And it did for us. So that first property, I actually did share rooms, but here's the thing. It's not like I was on Facebook Marketplace searching for any random roommate. I had two friends that I was living with that I was renting, and then they moved with me. I bought a $250,000 3-bed, 2-bath. I rented out 2 of the bedrooms. My mortgage was $1,500. Mortgage still is $1,500 on that property. But then I rented out the 2 rooms for $750 and $750, which covered completely covered my expenses. I wasn't making a ton of money at the time, so this was a lot of the money that I had in the bank that I spent on this property. But it was $25,000 between, down payment and closing costs. So I put all this down. I actually sold $40,000 of stock that I had saved up over 10 years or so to do this. And we've done some math recently about how the real estate has accelerated that versus keeping it in the stocks. Conversation for another day. But so this property allowed me to save money, and then my wheels got turning because I was able to not necessarily gain cash flow from the property, but gain personal cash flow in my life, get that $1,500 back in my pocket, so then I can go do the next one. So that was the start of it. It was in 2018, and we can get into the next one if you want.
Yeah, but I think at its core, you were willing to do what most people weren't. You said, hey, listen, I'm going to go buy a place. I'm not just going to live there myself. It's going to be a little strain on me and my lifestyle, but I'm going to put the other 2 empty rooms in my place up for rent. You rented them to your buddies, but basically your mortgage is covered and then your living expenses. It was cush from there. And I think maybe touch on your mentor recommending you to do this, and it started the whole thing.
Yeah, well, first of all, I want to say, a lot of people come to us and they're like, oh, I have 2 kids, I can't do this. Would I recommend you, your wife, your husband, whatever, with your 2 kids renting out rooms? No, probably not. But I think if you're young and you're single, you can definitely do this by sharing the rooms. And if you do have 2 kids and you want to reverse the habits that you were once in, and say, hey, I'm going to delay some gratification here for my 5 to 10 year self. You could do a duplex, triplex, quadplex, and the same thing. So I was working, and a mentor said to me, hey, I can't really pay you too much more. I remember I was making $35,000 a year, which is even less today than it was in 2018. But he's like, I can't pay you too much more, but what I can do is recommend that you go buy a 5-bed, 4-bath and rent out the room so that you can save more money. I can't pay you too much more, but you can save more money. Kind of that's where the ball started rolling. And I realized that my mentor, who was my boss at work, who I love to this day, he had a rental portfolio on the side of like 12 to 15 units on the side of what he was, building with the job that he had. So that was what got my gears turning, which led me to the duplex that I bought. So it took me like 18 months to save up. So like once I realized, okay, I want to go do this, then the house hack. And then it took me like a year from the house hack to the next property. And then you'll see this trend where it was like 6 months, 3 months to like get these next properties rolling. So that the next duplex was a $125,000 duplex that I put 25% down on. And I did everything wrong. Like I didn't know you had to fix the property up, all of this stuff. But that was once I found the right tools and the right systems and put a little bit of a process in place with like, hey, getting a Google phone to answer text messages, creating office hours, like creating an actual payment system for tenants, the property cash flowed $300 a month. So that was like, okay, I'm not leaving my job over $300 a month, but at least it's getting me started. And then we'll tie this back in, but the story of that is I bought it in 2020, sold it in 2023, and pulled $100,000 profit out of it, which opened my eyes and ears to being like, well, that's an average on the 3 years of $33,000 a year at my job. There was just no way I could save that much money. Like no chance that I could. I got into sales. You start to build your active income. The passive income grows, takes the $100,000, that profit, and then moved it into another property. So that was the evolution of like, you saw that, right? And you're like, okay, let's do this together. And that's how our journey kind of started together. And you'll notice the shift of the portfolio architecture going from onesies, twosies, ones that we own like ourselves, to larger projects that we own a percentage of, but it's a very different process for us.
Yeah, I just wanted to give my perspective here too. So, right, like Corey and I lived together before he got his initial house hack, right? Like we moved out together. He had other 2 roommates that were living with us, go live with him. I bought a primary residence with my wife, right? And then I know Corey bought this house hack, and then we go to the next stage, and then I see him buy this duplex. And the only way I saw him do this, 'cause we didn't really lose touch, but we weren't living together, so we weren't having conversations every single day. But I saw a post on Instagram, and I'm glad I did, because it was him standing out in front of this house with a pointer in the air, like one finger up, like one down. And I'm like,
I think it was actually, it's funny. I think it was actually 2 because it was technically my second, but
sorry,
yes.
You're right. No, you nailed it. It was a peace sign.
Yeah.
No, you got it. Sorry.
Yeah.
It had 2 because it obviously was the second property. But I was like, he's not doing the peace sign. This is his second one. And so it's just funny enough. So I DM him. I'm like, dude, you're doing what we talked about. And what we forgot to mention a little bit earlier in the episode, we've touched on it before, is like every day after work, Corey and I would come home and talk, and we'd be like, are we really going to do this till we're 67? Like the money's great. We've already bought like nice cars for what we deem as expensive. And we felt like this void. We're like, we just have to keep going to work to pay for these cars, to pay for our living expenses, to do all this stuff. There has to be another way. We see other people doing these things. We start studying financial independence, researching how to become rich, how to become wealthy. Real estate kept coming up and up and up. And, little did I know that Corey was going to take this thing full head on, and he started buying these rental properties. So fast forward, I text him and I send him a screenshot of his duplex with the picture of him putting up the peace sign. And I'm like, dude, like, congratulations. This is amazing. Like, what are you doing? What's the process? Like, I'm in. Can we do this together? And so we ended up meeting, had a couple conversations, and we just decided like, hey, we're going to do the next one together. We got to save up some cash. In the beginning, everybody thinks you can kind of get around this, but most people, when you're saving up or when you're moving to the next level and you're trying to buy real estate, you save up your own cash, and you have to, squirrel it on the side, make sure you have a little lump sum, and then you go put a down payment on something. To mitigate the risk and allow us to try to do this together, what we decided was 50% he'd put down, 50% I'd put down. And we ended up looking, he was really good with the numbers. He started analyzing deals. I started putting our systems together, and we ended up finding a property for $175,000. It was a duplex in New Jersey. And, we made the offer, and, I was nervous at this point, right? I'm like, if this offer gets accepted, we got to do this thing. He's already done it twice. For me, I really didn't feel like the primary residence was that big of, it was a big deal for me because I never bought a property, but when you're investing in real estate, you have to make sure the numbers are run properly. You're providing housing for someone else. Like this was a big deal. So I got a pit in my stomach as soon as we found out that the offer was accepted. I'm like, oh, we're doing this thing.
Yeah.
And so, you can get into the numbers a little bit, but just my perspective too, it's cool. Like I saw what you were doing. We always talk about this. You never know who's watching and whose story you need to be inspired from. Like had I not seen Corey post that, years could have gone down the line. We could have had no partnership at all. And instead of me just saying like, oh, that's cool, congrats, dude, it was like, dude, I see what you're doing. This is actually amazing. And I know long term it's going to benefit you in a crazy way. Like I'm interested too. Let's talk about potentially doing this together. So it's like you see something, take action and it, be curious and open to potentially, changing your life.
Yeah, this is interesting because we haven't really discussed this, but the portfolio architecture of us going from a couple duplexes and single family to growing it to more duplexes to the larger projects, actually, eventually people run out of money when you're investing in real estate, unless you're like professional BRRRR method. And it's a little bit harder to do that now, the BRRRR method, than it used to be. So as an example, like I own a few properties 100%, right? But then I even broke down it even further to the 50-50 where it was like, you owned your primary residence 100%. Then it's like, here's the partnership. We can buy more real estate together with 50-50. My 50-50 partnership grew. And then we got into the general partnerships where Ryan and I own a stake of the general partnership, 30, 40, 50% of that deal. So then that's how we're able to turn a $175,000 duplex into a $2.5 million 18-unit project by scaling that way. And we'll get into that. But just in terms of this duplex, I want everyone to hear this very loud and clear. We, in 2020 and 2021, we were able to take advantage of 3% interest rates on investment loans. So that's part of the story. Doesn't mean it's impossible today. We have people in our community right now closing on deals at 7% interest rate that cash flow. So do not take this as like, oh, like this is how it was back then, because it's possible today. But I always want to be transparent about that. This duplex, $175,000, again, turnkey. We didn't put too much sweat equity into it. We redid some floors. We did like, probably 10 to 15 grand of stuff in that property, but it was a up-down duplex, 2-bed, 1-bath, 2-bed, 1-bath. And then we rented the one side for, or was it side? No, yeah, it was up-down. And we rented one side for $1,500, and then the other side was a Section 8 tenant, and she was in there for like $950 or something like that. So we had to slowly raise the rents. By the end, before this property, actually, this is the property that actually burned down. So story for another day. Ended up working out. Get insurance. But this property at the end, we had a like $1,000 mortgage on it because it was 175. Put 25% down, but it rented for close to $3,000. So think about that. A $3,000 rent payment coming in every month, and some of it backed by Section 8, and then $1,000 mortgage payment plus expenses. We were easily clearing $1,500 a month. So when this property had the issue, the neighbor's house caught on fire and it rolled over to our house. It was a mess. Got everything worked out, but we were cash flowing $1,500 a month. So we saw the power quickly of real estate and how this could accelerate because we were able to put that money, not into our personal pockets, but into our bank account to save up for the next one. So that's kind of where the next property comes in. We had developed relationships with not just lenders, but agents, people that were finding us on and off market deals. And then the relationship turned from just that to title reps or somebody who owned a title company, a real estate attorney. And then the attorney found us the $135,000 house that I guess the person was passed away, unfortunately, like who was living there.
Yeah, it was an estate sale.
Yeah.
Funny, he went kind of fast through that, but this real estate is a relationship game, and we would never have been able to scale to the unit count that we have now, but the types of properties that we're buying without the people in our corner. And you have to go through the motion. Like you can't skip steps is what I want to say is like Corey had to go through the house hack. We had to go through the duplex. We had to go through the fix and flips. We had to go through the smaller projects to be able to mentally feel like we were prepared for the next level, but also to build the team around us and the systems around us to be able to take these things down. He alluded to, once that we dealt with that duplex, this property was a fix and flip. We bought it for about $135,000. We put about $60,000 worth of work into it. And I'll let Corey get into the numbers a little bit more. But the point is how we found this deal. It was actually a mentor from my W-2 job. I'd worked with this gentleman for 10 years. He owns a title company. And when I told him, hey, listen, I'm thinking about getting into real estate, he's like, listen, whatever you need, call me. I've been in, he's mid-50s at this point, or maybe like late 40s at that point. And he's like, I've been in the game for so long. I know a good deal between a bad deal. I actually work in the direct pocket where you're looking in South Jersey. So if you ever need an attorney, if you ever need title agent, obviously you have me because it's my company, real estate agent, the whole team, right? So we felt so good that we had the backing. If we had any questions, we had someone to go to. But my point is, Corey already alluded to it. We met an attorney that was his business partner, and they worked heavy in estate sales. We found out that like a 99-year-old woman unfortunately passed away. Her family wanted nothing to do with the property. They weren't really investing in real estate. They just wanted their cash and to move on with their lives.
It had been paid off for like 30 years probably. No one's touched it in like 60 years. So yeah.
And I vividly remember this project, and it was one we like detailed on our social media on Instagram for a long time. But I remember Corey and I, this was when we were really hands-on. The duplex, we were a little less hands-on because it didn't need a ton of work. But for this one, we would show up on the weekends. We hired 1-800-JUNK. We were helping them move stuff out of the property. We picked out the exact flooring, the paint, the fixtures. We had to have a general contractor come in and like map out each room. And this is the first one where I felt like, whoa, like we are really doing the damn thing.
Yeah, we got to get trucks, right? We're real estate investors. We got to get trucks, and we got to get like ladders and just put stuff in our wood in our trucks.
Do you remember when I asked you that?
Yeah, you're like, I think we're real estate investors. We got to get boots or something, right? I guess.
I go, dude, do we need to get trucks now? He goes, what are you saying? I go, I mean, like we're real estate investors. Like we probably need a truck, right? For like wood and shit. And he's like, no, dude, we don't need a truck. So it was actually really funny because these are the things you actually do go through when you're going through the motions. And I don't mean to like not think about these things anymore, but there's a lot bigger problems and like things that they're so like second nature to us now. But when you're first getting into your deals, you're thinking about all these little things. And so he laughed it off. Sorry, keep going into the property.
No, it's funny. So this property is funny. We're actually selling it now. Now, when we talk about getting into real estate, like I always tell people, you should be in 5 years plus because we buy and hold. We don't fix and flip. We're not wholesalers. We buy and hold. However, this is a whole nother conversation, but because of what's happening economy-wise, debasement of the dollar, like there's things that are going on, outside forces, and the appreciation that we've seen in the last several years since COVID, we're moving this equity that we have, about probably $150,000 to $200,000 of equity in that fix and flip that we did. When you say fix and flip, I mean fix, flip, hold, right? We didn't actually sell it, but a rehab and hold. We're selling it now. We're in the process of doing that so that we can pull that equity out and then go deploy it into another deal. So this is some more architecture of this. And then as this moved into a new direction, Ryan and I said, okay, we have the long-term down. We kind of pivoted a little bit from our buy box, like for a period of time, and we went into the short-term rental route. So we bought 2 short-term rentals. One I bought myself. I took that $100,000 from the original second duplex and bought a property in Tampa, Florida. Now I bought this by myself, but I did, I put 15% down investment loan. I furnished the place. I put $50,000 into furnishing, and I made this place like a real oasis that I could go down and enjoy with my family if I wanted to. So real estate's a lifestyle play. You don't have to just hold on forever and never be able to enjoy it. This property makes me some money, but I'm more concerned about the area that I bought in. Like I wanted this place to be, I'm looking at coffee shops, I'm looking at restaurants, I'm looking at new development, I'm looking at the area that's just like skyrocketing. So I bought this property down there, and this was a little bit of a higher purchase price. So you notice we said we bought our properties for $250,000, $135,000, $175,000. This property was between $500,000 and $600,000. So we're moving equity that's growing at 3 to 5% from small projects to triple or quadruple the size projects. Now that same 3 to 5% in appreciation is growing at a faster, not rate, but dollar figure, because now they're in higher value, higher asset projects. So that's great. We did that. But we also forgot to mention that we bought a short-term rental, the 2 of us, in the Pocono Mountains, like a $250,000 cabin. We learned so much about what's good, what's bad, how hands-on you have to be in short-term rentals, the 5-star front desk mentality that you need to have in short-term rentals, the team that you need to build of admins, like how to navigate Airbnb. There's so much there. We ended up selling that property. What we did is we bought it. It was near Airbnb ready, very close. And we furnished it for probably $20,000 to $25,000, put in a hot tub. We redid some of the kitchen. You were up there doing decor on the walls. We got new like bedding, all this stuff, very mountainous. We put wallpaper up, and we rented it out for a year. So we took a $250,000 asset and made like $65,000 revenue for a year. So then we were able to turn around and show that revenue to a new buyer. And that buyer was like, okay, this is the revenue that I'm about to make on this property. I think it was like 200, then sold it for like 260, something like that. So we didn't want to manage it the way that we needed to manage it. and we pivoted. And that's, I don't necessarily recommend buying a short-term rental and selling it a year later necessarily, but it's almost like a Airbnb, if you will. Like you can generate revenue and then show a new investor, hey, this is the revenue we made. We just wanted to pivot and move into a different asset. Then this pivotal moment for us is when we started to think, should we be continuing to buying the duplexes, the single family homes together, or should we go larger? And the only way for us to go larger was to partner with the right people, because we didn't have $1 million in the bank account to go put down on a 7 unit, on a 43 unit, on an 18 unit, on a 10 unit, and most recently a 7. So I think that started, like, this was a moment where we're like, okay, what asset class do we want to be in? Still some decisions to be made there, but then how do we want to buy real estate going forward?
Yeah, you nailed it. I just want to touch on one thing too, because everyone's in a different financial spot, but what allowed us to do the things that we were doing at a high level, you mentioned like, oh yeah, we put $25,000 into renovations here, we put $60,000 in renovations there. And I think some people might be thinking about like, well, it must be nice to have the money. Real estate is forgiving, and it allows you to be able to manipulate deal after deal. And what I'm saying is, that $100,000 that he got and he put down in Tampa, there's cash flow from other deals that came in, and also at the same time,
jobs, dude.
Exactly.
Yeah.
We were still managing 6-figure jobs. We both worked in sales. We had a salary, but then we also made bonus and commissions, and we were, making a high clip of income. And instead of living outside of our means and buying the flashy cars and upgrading our clothing, our vacations, our lifestyle, we pocketed the money, put it in a bank account specifically for real estate. So when an opportunity came up, we had the funds to be able to do so. And it's really interesting. You have to find the right partner. And what I say is, like, with Corey and I, we were very meticulous. We were making very similar dollars at this point. And what we were doing is putting cash aside, and we're saying, okay, like, what do we have right now? Are we like feeling like we have 50 each to put in the next deal? Do we have 25? Like, are you putting that in another investment? And so you have to really navigate this thing intelligently, but we were able to put more cash away. And then for these bigger deals that Corey's mentioning that came up, we had the opportunity to invest in a 43 unit boutique hotel. Then we had the 18 unit, then we had a 10 unit, another 7 unit. But it's making the decision, hey, is this one the right for us now? Like, where are we at in our investing career? Do we want to be passive investors? Do we want to be active investors? Do we want to be general partners? Do we want to continue this 50-50 game? How are we going to outlet? And you have to take almost a pivot after each deal to kind of reset and find your footing, because we did a single family rental, the long-term buy and hold, right? Traditionally, we've done the Airbnbs, the short-term rentals, we've done the fix and flips, we've done, I forget the house hacks. So like every different strategy, the next logical thing for us was to get into the bigger game and say, hey, we know how to run a business on a smaller scale to make the clip of money we want to make and to put the time allocation we want in. We need to get into bigger deals, and I'll kind of let you get into there, see if I missed anything.
Yeah, no, that was it. This story is really to share with people that you can start small and start to build and learn the game and understand the technical moves that you need to make, and then you can pivot into larger deals. But the single biggest reason we were able to pivot into larger deals is because on day 2, when we had 2 units together, we had 2 units together, and I decided, let's start a podcast. Let's talk about our journey and just share our story. And if you're listening to this podcast, you're listening to probably episode 340 something, right? The evolution of it. But go to our Instagram, Wealth Juice Official. Like, you'll see, we have, I don't even know, probably close to 60,000 followers at this point. But it started with just us sharing our story. So I say all that to say is that anybody can just put their message out there and say, okay, this is where I'm at in my journey. If you have 3 units, if you have 1 unit, if you're looking for your first property, go share with the world what you're doing, because the knowing and the liking and trusting of us building our portfolio started with, hey, we have a platform that we just talk about this stuff. Like, now we can take this platform when someone says, here's my virtual resume. I don't give them a business card. I give them our Instagram, and then there's an instant validity to it. I don't care if you have 50,000 followers, 70,000 followers, 10,000 followers, 2 or 100 followers. You have somewhere to document a collective, collaborative scrapbook digitally online where you can show people, this is what I've done and this is what I'm looking to do. Can I find other like-minded people? And that is why we went from not just going from a duplex, like repeatedly. We then, the next deal was a 7 unit in the Poconos. And that is a byproduct of somebody that we met, that we interviewed on our podcast, who was ahead of us, financially free already, actually, younger than us, hungry, building in the Pocono Mountains. And this was our first commercial mindset type deal. So we already had some experience in the Airbnb game because we bought one ourselves. I had one that was being managed by a property manager, and now we're like, okay, let's go take this down together. Let's partner with somebody who's boots on the ground. Let's raise some capital. Let's market this. Let's rebrand the company. Let's build them a website. Like, this was a real business. So that project we still own, and we own a percentage of it with the other general partner and then other passive investors who come in. Now, what we learned quickly about Airbnb is that it's very cyclical in terms of the cash flow in the Pocono Mountains. So we weren't getting, previously I mentioned, the $1,500 a month in cash flow every month, the steady, passive-ish, hands-off type of investment. What we were doing is we were making a bunch of money in the summer and a pretty good amount of money in the winter, and then breaking even or even sometimes losing money in the fall and spring because of when people visit the Pocono Mountains. So these properties were bungalows, 2-bed, 1-baths, or 1-bed, 1-baths in this like unique area in the Pocono Mountains. People would go up to ski, they go lake activities in the summer. And our goal was to buy properties, add them to this little portfolio, and just hold it for, probably 7 to 10 year play. And then we can either refinance in a portfolio loan or sell it as a package to another investor. We haven't got to that point yet. So this was 2021. We're 4 years into this. We get some cash flow in the summer. We don't in the spring and fall. We get some cash flow in the winter. And it's just it's a long-term hold, but it's also an experience that we can send our friends, family, and we can market it the way that we like to based on like our social. So that was, we learned a lot though. It wasn't just like, oh, let's just accelerate our cash flow. Like there's been bumps in the road on that project.
Tons of bumps in the road. I also want to say, like, you touched on a few different things here, but one thing I want to mention is we talk about cash flow a lot. And I think a lot of people think when you get into real estate investing, you're going to make all this cash flow on a monthly basis by renting out your property if you run the numbers right, and you're going to live this lavish lifestyle. What we found is the equity buildup and the loan pay down is real, and the appreciation. Those are the big wealth drivers. So with this property, the 7-unit up in the Poconos, we've by the way, it was originally a six unit. There was an empty piece of land. We were going to sell the piece of land. Or then at one point we were going to put up another cabin in there. We ended up selling the piece of land, buying an A-frame, tying it into the 7-unit. So it's been very creative.
And we put a lot of our own capital into that A-frame too. And we refinanced. Yeah.
Yes, refinanced. We reinvested. I remember you and we had to shell out an additional like $25K at one point, and we were just like, is this worth this at this moment? But the best part about that deal for us, it's the hard part for people to swallow sometimes, is it's very much money in the ground, but we're on a 15-year note. So every month that a ton of capital comes in, we might not make a crap load of cash flow, but we're paying down that loan so rigorously that at some point here in the future, we're already 4 years in, right? 10 more years, that place is paid off, hopefully a little bit even faster by how much cash is coming in. But my point is, you have to get creative. You have to understand that it's not just a cash flow play. And that's, some people can swallow that for real estate. Some people can't. There's been numerous times where we feel cash poor, but we have a multi-million-dollar real estate portfolio. I'm like, what are we doing, dude? Like, so it freaks us out sometimes because you're like, it's the benefit of real estate. And I say freaks us out because you have all these opportunities that continue to come up and you're like, well, I need the liquid capital to be able to invest this. I need to refinance this place before I can do it. I could sell this place. Am I going to use my W-2 income to be able to afford it? But there's one other thing I just really want to touch on so I don't forget, is you touched on the power of branding and social media and starting the podcast. And I just want to give you kudos to that, because for me, when we were starting the real estate game, I just thought, hey, listen, we'll just continue to buy properties. You had this vision. You actually, I think, were a bigger listener than I was at this point to Bigger Pockets. And as you would commute back and forth to work, is the biggest real estate podcast in the world at that point. And you're getting inspired by all these other individuals who are creating financial freedom through real estate. There was only one issue with the podcast, was that it felt out of touch. People had 7,000 units. They had these, 18 units, 30 units, and we're just trying to find our first deal. So you approached me and you're like, dude, as we buy, like, I think it'd be intelligent for us. By the way, this was COVID, the world shut down, so we had a lot of free time on our hands.
Literally April 2020.
Yeah. And you approached me, you're like, dude, I think we should start a podcast. Like, it was this riveting idea you had, and I'm like, what? Like, okay. Like, and then I was
two
like,
bros starting a podcast, like, that's so original, right?
Sounds like every other dude starting a sports podcast talking about the Eagles or the Pats or whatever. I'm like, okay. But I didn't actually go that far against it. I was like, okay, tell me more. Like, what are you thinking? And he's like, well, I actually want it to be real estate. I think we should share our journey. And I kind of laughed to myself. I'm like, dude, our journey is
nothing.
Still working our jobs. We have 1 unit each. Yeah. So, but I said, okay, Cor, I'm down to do it. Whatever you're doing, I'm in. Just know I'm kind of a freak, and I mean like a little bit of a control freak, and I'm sorry, but like if we do this, our names are attached to us. I want to like do it right. And so we agreed that we'd put it into a business and like a media company. So we started the LLC. when we started the podcast, we then immediately started a social media profile. The podcast at that point was called The Weekly Juice. And we just thought of it as like, hey, listen, we're going to give people their pack a punch, their juice for the week, like fill up your cup, abundance mindset, like listen to us if you need your little pack a punch in the morning. And so
you'd search it on Google and you'd find like juice bars.
Juice boxes. Yeah. And so maybe not the best name. So for the longest time, it was Weekly Juice, but the Instagram that we started with it, looking back, you guys would laugh so hard because this is people seeing our page now. It's at Wealth Juice Officials on Instagram. So just if you're driving right now and you're listening to this, just to give you perspective, you'll probably look at it now and be like, these guys are pretty polished. Like every other day, we have an inspirational tweet that goes out. Then we have another one of Corey detailing how to buy real estate and kind of educating. And it's very methodical. The last month, we finally got up to like roughly 60,000 followers. We have almost 5 million views at this point in the last 30 days on our content. And it's just cranking. And it's taken us 6 years of posting every single day without missing a day to get to this point. And I just thought about this. I was like getting annoyed by having to comment on every single comment on our posts. Like, because the more you comment when people engage, the algorithm pushes it further. And I'm like on the phone for an hour, just replying to people. And I'm like, wow, man, could you imagine what that would have felt like 5 years ago if you're really complaining about potentially getting 300,000 views on your post by just liking and commenting? So for me, and we have it pulled up here in the studio.
Terry, you better follow, man. You better toss us a follow. We got this thing pulled up here. Yeah.
Yeah, Terry. So producer Terry just hooked us up. But yeah, 56.8 thousand followers at this point. And this all started, the brand looks completely different at this point. Like back in the day, it was orange with like this cream colored. We didn't have our faces as our profile. We had our cup logo and we didn't know what we were doing. That's my point. And every day we just decided to attack it, change things, tweak things, study those who are doing it way better than us. And then, by the way, adapting to the algorithm that changes every single month, it feels like. So some people, you kind of get into this feeling like at some points, people are getting to 100,000 followers so fast and 2 posts go viral. I'm like, what are we doing wrong? And you always feel like you're behind. And like, how are other people finding the cheat code without you? And so this mental battle that we've gone through between our real estate portfolio, building a brand, building a social media, trying to find our niche and our avatar and our community of people has taken a very long time. But I think back to, a couple of times where we've had some road bumps, and Corey and I had a million conversations about like how tough this is. And like, we're going through cycles of life, and like, he's just is very adamant. He's like, dude, we're just not stopping. I promise you, if we just do not stop, it will figure itself out. And I'm like, I've trusted it. I said, there's been so many days where we're like, not really feeling it today, or today's amazing, or today's horrible. And like, how could this happen? But if you just can go to bed, close your eyes, wake up another day and just keep going, that has fueled us. And we've learned to pivot, build a relationship with other people. And the podcast has given us so many connections to people that are doing this 10, 20, 30 times better than we are, whether that's on the social media front, the podcast front, the real estate front. And we've been able to learn from them, to get into rooms with them. And then we're getting ahead of trends. And I feel like that's when you really win in this game, where you're like, I can see the next thing coming now when it comes to social media, this AI revolution, Bitcoin, buying real estate, small to mid-size multifamily instead of the large 100-unit multifamily. Like a lot of things where we're getting ahead of the game. Rates are potentially coming down in the next couple of months. Like studying everything, where back in the day, we would have just been thinking about one thing, what's right in front of us. So if we can think in decades as opposed to thinking about just tomorrow, that's what I want to get across to you guys. Like, think about the bigger picture and commit yourself to not stopping. It'll evolve and the flower will bloom one day.
What is right in front of us that you mentioned is most people cash flow. That's like what's right in front of my face. Like, oh man, I got to escape my job. I got to get out of this thing that I don't like. And if you think of real estate in that way, it's gonna burn you, because you're gonna make decisions that are desperate, because you're gonna be looking for cash flow. Then we were talking about this conversation. We've been through a lot of shit, you and I together. And we were having this conversation in the past couple of weeks of like, it's year 6 or 7 now. And now, literally, for like pretty much the first time, we're really starting to see the fruits of the labor. And that's taken, is this working? Are we doing this the right way? So people look at us and they think that we're at a certain level. Well, guess what? We're looking at people that are at a whole nother level. And I want to say that anyone listening to this podcast, it's 100% possible for you to obtain massive wealth. But is it 100% possible for you to do it by February 2026 if you're starting out? Maybe. 1% chance, but most likely you need to put 3 to 5 plus years in. And I can just see, even though some days are a struggle, I can see the 2029, the 2034, when we're 45, when we're 47. Like I just know based on the amount of money that we have in the ground and invested, how the acceleration of that compounding interest is going to change not just our future, but our kids' future and our kids' kids, because it takes so long to get to this million plus range of the net worth aspect. But then to get to 2, to get to 5, it's like, I was having a conversation with someone the other day. They're like, just keep investing because it's unfathomable how fast it grows once you get to a certain level. Like once that hockey stick goes, but to get to that first 100K, 500K, like it's the grind, and it's what people, most of them give up on. So to get back to our portfolio a little bit, we decided that instead of going after the onesie twosies, we were going to pivot, and kind of by osmosis a little bit, our buy box became 5 to 50 unit, because we realized, okay, like I don't know how to go buy a 200 unit. Turns out it's like, we haven't done it, but it's a very similar process to buying a 5 unit or a 10 unit. But we figured institutional money is not going to go try to outbid us on a 100 unit or a 200 unit. Let's find the people that we know in our network that we can grow with as general partners and find the 5 to 50 units. So going through our portfolio a little bit now, a little bit more. After the 7 unit, we bought a 43 unit boutique hotel. And this was with a few more investors than we were used to. So the 7 unit was with like 3 to 5. The 43 unit was like 10 investors. So that was because we had experience in the short-term rental game. We fixed up a boutique hotel with a partner. We put pickleball courts in. We put fire pits in. We redid the roofs. We redid the outside. This was a long project. It probably took 18 months. And guess what? We thought it was going to be a year, but it was longer, and that's real estate. So the cash flow on that is very similar to the 7 unit. Make some money in the summer, make some money in the winter, break even in the spring and fall. We don't even think about the cash flow as much. I shouldn't say that. I think about it all the time, but it's not coming in as much as we would like. But what's happening is with the principal paid on these loans and having it on a 15-year note or a 20-year note, you're accelerating your portion of this project. Like, for example, on the 7 unit, if you had $100,000 invested into that project, you're not, forget the cash flow, $600 a month, accelerating even quicker, 600, 605, 610, 15. These are months going by that your principal is getting paid down based on a 15-year note. So you turn around in 5 to 8 years and you have your 100,000 becomes 250,000, right? That's the acceleration of it. So we had to sift through who was our partners. We had to say no to people that approached us. Do you guys want to partner on this deal? Not sure this is our wheelhouse. Don't really want to go down this road until we found our partner, Sean. And that was 2023, where we started to go from the boutique hotel, the cabins, to more tried and true long-term rentals in the Northeast. So our portfolio shifted from PA, Jersey, the one in Tampa, right? But then Pocono Mountains. And now actually where we're actively buying the most is in New Hampshire and Vermont. And it's interesting how that's happened because of the relationships, because of putting our message on social media. So then comes this 18 unit opportunity, off-market deal from a relationship, from a lender that our partner Sean had a relationship with. We underwrite the deal together. We decide, I think the best route is actually to go Section 8 with this. Let's put in Section 8 tenants, the Section 8 stipends for a 2-bed, 1-bath in this area was like $500 above the market rent. So we took the market rent of properties that were like pretty outdated, fixed them up, put rental grade, nothing like fancy, but rental grade furnishings and rehab, did light package, redid the outside. This property was purchased for $2.4 million. We hadn't bought anything, that up until this point, excluding the 43 unit, like now we're buying multi-million-dollar projects. We don't own the entire thing. I want people to realize that we own a solid portion of it, but we're able to take people that came to us and said, guys, I see what you're doing. This is so cool. I'm working my 9-to-5 job. I'm seeing the growth in the stock market, but I really want to diversify. Great. Here's our track record of the projects that we've bought. Come invest alongside us as a limited partner. Come build wealth with us, and that's the collaborative things that happen at the top. So this 18 unit is in New Hampshire, $2.4 million purchase. We bought it in June of 2023. We are in the process now of looking to refinance because the property's fixed up. It's 100% occupied, and it took us longer. We thought we were going to rent this out in renovate and rent out in 6 months. And it took us 9 months to get, maybe even more actually, maybe like 12 months, 12 months to get it fully turned and rented. So we had to be patient. So the stabilization strategy was getting the guaranteed rents in a recession resilient atmosphere with the Section 8. Now we're getting the cash flow. And I want people to hear this. This is big. We're paying back our limited partners on this project. A property that we bought in 2023 in June. In September of 2025, we received our first cash flow payment from this property. So when we say we own these properties, we know it's long-term. We know that these are large payouts, and now the cash flow is not just starting now, but it's accelerating it every quarter. So think about that. You buy a property as a general partner in 2023, and 26 months later is when you start to see cash flow from that. And that's a hard pill to swallow for a lot of people, but it is guaranteed to build you wealth. It's not an if, but it's just a when. And that when could be immediately on a property. It could be 2 years down the line. It could be 3 years down the line. You just have to keep that in the back of your head. And now we have this like, okay, now I know how this game works. So I just need to stack a bunch of these properties, and stuff is going to go bad. Stuff's going to go wrong, but you just keep at it. And we'll get to the rest of our portfolio. And I'm probably cutting you out here, but this is how it works.
No, you nailed it. And I just want to pause right here because I have a couple thoughts. And we decided collectively, Corey and I, like, this is how we're going to buy real estate moving forward. Having gone through this process on the 18 unit and meeting every single Friday with the property manager, understanding how the deal works at a deeper level, and seeing the decade-long process this is going to take, but the fruits of our labor are going to pay off so much more doing a deal like this than doing the onesie twosies down the line. But I want to touch on a couple of things that you mentioned. Like, we're just receiving our first deposit of cash flow after whatever you said, 26 months, something like that. That's a long time. So for people that want to get into this game, there's so many different types of investors or people that are looking to get into real estate. You have to figure out what your lane is. I always recommend people to have active income coming in if you want to invest in real estate. Though real estate's forgiving, it's very hard on your first or second deal to go all the way in. Corey and I, for the longest time, for 5 years, both kept our W-2 jobs and used the cash flow, I should say, or our pay from our jobs, and infused it into our business and into our deals. So for those people who think like, hey, you can just become this real estate mogul and have a ton of units without having a job inside. No, like, swallow your pride and understand you're going to be working 2 jobs potentially for 5+ years to get this thing going, or at least we did. There's other ways to get into the game and you don't have to go that way. Maybe you get into real estate, but our jobs had nothing to do with real estate. So we were continuously shutting our brain off from real estate, going into sales, turning it back on, and we would work, 5 to 9, getting up super early some days, but majority was working 6 to midnight. We're more night owls than we are like those 5 a.m. rise and grind guys. But my point is, what has helped us get to the level we are after having the active income, I want to touch on that, is like the relationship capital. We talk about having the money, and that's stacking up and compounding in the ground through real estate plus the W-2s and the businesses we've built. But the relationship capital has allowed us, like, if we ever get into a massive pinch where a big problem happens, we now have the people around us to go to and say, hey, have you experienced this? How would you go through this? Do you have another connection for me to help me power through this without having to take 5 months on a question where I can get it done in a week? And so that has come through us realizing how important people are and how important relationships are. And you have to go through and date someone for a long time before getting into business with someone. I think you touched on getting into partnership with Sean, and we've had people approach us for a number of different things. And what we found, and only through being in rooms with a lot of people, and when I say rooms, whether it's through the podcast, whether it's through mentorship groups, whether it's through just people that we've known at a high level of success, like our confidants, asking them, they say that one of the biggest qualities you can have and you develop over time is the ability to say no. The most wealthy people in the world say no more times than they say yes. And when they say yes to the right thing because they know it's going to compound and flourish over the years, whether that's a relationship, whether that's a deal, whether it's a business, all of the above. And so for us, we've had to go through trials and tribulations of saying yes to some, didn't work out, and then really building our buy box on a relationship, morals, values. What's your outlook on life? How long do you want to be in this real estate game? What's your track record? And we dated Sean for an entire year before doing a deal with him. And I just want to say that, like, we had Zoom calls. We met time after time, had him on the podcast a couple of times. We talked about family. We talked about why you're buying types of deals. We underwrote deals together. And so I say this to say, it's a year. People, you get an idea and you start thinking about wanting to get into real estate. Should I get into a long-term buy and hold? Should I get into Airbnb? People get so wrapped up when the minutia and like picking a strategy that they never start.
for years to even not think about it, but actually act, right? Yeah. I didn't mean to cut you off, but that just came to my head.
No,
yeah.
no, you've nailed it. So they never acted. What I'm saying is Corey and I were fortunate to have each other to balance this whole act together to say, hey, dude, like, what do you think we should do with Sean? Like, well, okay, let's wait a little bit longer. He seems great, but let's ask a couple more questions. So it really just took a year for us to not only say yes, but really to have the right deal pop up. He had deals coming left and right. And we were like, you know what? Not right for us, not right for us. Boom, 18 unit. This is the right one. And funny enough, I actually grew up in New England. So I've always wanted to get back there and start investing in real estate. I have family that has properties in New Hampshire and Vermont, ironically both. So I was like, this seems like the perfect deal. Sean went to BU. I have friends and family that went to BU. So just a lot of connections that opened the door, right? Having a relationship just on like a basic level, but then taking it to the next level. So I just want to say, do due diligence. And the last thing I want to say, and I'll let you get back into these deals is, it seems crazy to go through this timeline right now. And we're talking about insane deals. Like I'm thinking back to us 5 years ago. And if we were talking to someone that had 95 real estate units, we'd be like, that's insane. I'm never going to get there. I can't even fathom it. Give me 2. And that's where we're at. And so I really want to make a point to say like everything you do now on a daily basis and the things that you commit to and wake up and start trying things, future you is going to look back and say, damn, thank you. Because I never fathomed being at this level. And I'm not saying this in a way to be like, we've done so much. But personally, the day we started the podcast, if I could think about us having 95 units and still doing the podcast, still doing this and not being at a different place in our lives, I'd be like, I couldn't fathom it. So, I guess this is future me saying thank you to younger me and just showing you an example of committing yourself to the game and not quitting because it's important. And we're like a real life case study of it's going to get hard. This game's not for the faint of heart. It's long. It doesn't have to be real estate, but do yourself a favor and take care of future you because you might have a kid, you might have a wife, you might have a family that all now relies on you and you made their lives easier and through whatever that wealth building tool that you decide is.
I want to stay authentic to who we were in the beginning of this. We are still such a work in progress in building this thing. Like when we say to people that it's on our Instagram, like 90, 80 plus units while even, keeping W-2 jobs. I left the W-2 world. You're still in it. So that's changed. We're over 90 now, 90, 95. And the thing is that it's not like we have $250,000 each of cash flow coming in, like just cruising along, like just like life is like perfect, So I want people to hear that this game is really extended out. Now we're in such a better position than we were 5 years ago. But like, if you're listening to this and you're in the middle of it, you have a couple units, you're in the struggle, like think about just the fact that this is going to take you maybe a little bit longer than you thought, but you will definitely get there and you will have to celebrate some level of progress along the way. And that's for us is like, I feel like we're just consistently planting seeds. That's what I'm doing. I was just like consistently planting seeds. And some of the bushes that we've planted, if you can see on this thing here, some of them look like this. They're like 3-4 inches out of the ground. Like they're like, okay, now we're starting to sprout. I don't think any of them look like that yet. This one's like 6 feet tall in the back, but this is where they're going to get to. And those are going to become that one day. But some are 3 feet tall, right? Some are just like still in the ground. And it's just like, you kind of have this garden that you're just like nursing, and it grows in different ways. And then you take some of the money, you take 2 of these plants and you put them over here and they doubled in size. So it's like, I just want people to remember that it's like, it's not linear. We've had a lot of setbacks. So I'm going to get back to this, just giving people the architecture of this, and talking about how we built our portfolio. But just think about this. Not only do we not have $250,000 of cash flow, we don't have $100,000 of cash flow. We have cash flow that is now starting to compound. That is going to, it's like, okay, it's working now. 7 years later. So keep that in mind. The next deal, as we kind of wrap this up, we've been going for a little while, but this next deal is a 10 unit. Also in Northeast, this one's in Vermont. Now this one partnered with the same guy, general partners, about a $2 million purchase, and we're very close to Dartmouth Health. So our goal with this project actually was to rent to traveling nurses, furnish the property, midterm rentals, rent to traveling nurses, and get like 50% higher rents because this is an A-class area. Walking to coffee shops, walking to restaurants, like nature reserve. It's on a golf course. We actually are members of this community where we can play golf and there's ski hills and everything. It's really cool as owners, and not just us as general partners, but the limited partners as well that come into this. So little added benefit there. But came from a lender relationship. We went out to a similar investor base who was like, I'm seeing the results in the 18 unit. I want to park some more money with you guys. Now these deals are starting to feel a little bit more normal for us. But because of the demand and the 0.4% vacancy rate in this area, where there's not only the healthcare system, but there's a tech bubble. Strava is there. Google is there. Ozempic, the healthcare, as Sean goes, I think it's the fat drug, right? What's the fat drug? He always says that. All of these like little hub of tech is in this area. So we thought we were going to be rent to traveling nurses and get, instead of a $2,000 a month market rent for a 2-bed, 1-bath, we thought we were going to get $3,000 going to traveling nurses. But only a couple of these properties ended up being traveling nurses. Because we furnished the property, we were able to get not just the 16-week or the 12-week stipend payments for traveling nurses, but people signed year leases at the $2,900 or $3,000. So a little bit less management intensive. And the goal is, because we're not force appreciating this property too much, we're probably going to try to hold on to it longer. And we're trying to make it a little bit more of a cash flow play. The refinance is going to be a little bit further down the line if we do it at all. So we now have pivoted into, okay, this is how we're buying real estate. Like, we have created an investor base, people that are like, I trust you guys, let's invest, let's do this together. And we're able to tackle larger deals by the collaboration. Now, this doesn't happen overnight, but take your collaboration. If you have a couple units and you're thinking, how do I scale a little bit further? Go to friends and family and start to build relationships, even where you can own 25% of a project. You and 4 people, you and 3 people can take down a larger deal. You and 6 people, you and 2 people. Like, in the beginning, it was me, and then it was Ryan and I, and then it was Ryan and I and a partner. Then it was Ryan and I and 2 partners, keeping our circle small at the same time. So that is the 10 unit. We closed on that in March of 2025. And our goal was 1 property a quarter, which is lofty. We didn't get to that at all, actually. So we just closed on, our goal was 30 units this year. We talked about this in the beginning. So we're at 17 right now because we closed on the 10 unit in March. Today, we closed on the 7 unit. And I think we're working on an 8 unit that should close by the end of the year. So we'll get to like right around 25. Maybe there's another 5 units in there somewhere. So that 10 unit, and then continuing our focus in this New Hampshire, Vermont area, a 7 unit. I can pull up some of the information on this and talk a little bit more detail, but this 7 unit is a B-class asset. The estimated IRR in this project is 16%. We're purchasing it for $1 million with partners, raising some capital for it, looking for a stabilized cash-on-cash return of about 9%, holding on to it for 5 to 7 years, and the projected equity multiplier on this, meaning if you're putting $100,000 in, the projected equity multiplier is 2.1. So the goal is, in that 5 to 7 years, to double our money, not just our money, but any limited partner investor in this. So the growth plan for this type of project is, because it's a B-class area, not A-class like our other deal, but B-class, we're going to renovate the units and make them premium. We want them to be the first unit that somebody sees when maybe they're coming down from an A-class or moving up from a C-class. Like, this is the premiere of the B, because you can't change the location, but you can change your property. So we want to attract working professionals. So people that are either on contracted jobs in the area, or they work for some of this tech hub that we mentioned. So we're going to increase each unit on an average of about $300 to $400 a month. So that skyrockets the NOI on the property. And then the current ownership is paying for heating. So we have to pay for heat, but the property is individually metered. So we're going to convert the current ownership of paying for heat and then have the tenants pay for the heat, which on a commercial project instantly increases the amount of money or revenue that you're bringing in, which automatically increases the value of the property. And this is the difference between residential, where you're comping out properties on an appraisal basis based on one guy with a clipboard going in or seeing what other comps are, and a commercial side. When I say commercial, I don't mean commercial like, you're renting it to an office, but the commercial lending level, where the property is now is a basis of what the revenue is bringing in. So if you can turn over, even just by that simple fix, our property is going to consistently be worth more. So we're going to generate more income here actually by renting out the 2-bay garage, which is huge, as a little bit less of a management headache. And it's a current owner's workshop, so we're converting it to storage or some form of a storage in that way. So this project is pretty exciting, and we closed on it today. And Sean just sent us a text of the closing table right before we came in here. So that's kind of the evolution. Maybe I left some things out, but that's where we're at today. Hoping this 8-unit works out. We're close on that one as well.
Yeah, I just want to wrap the episode talking about, like, in today's climate, financial climate, and the market as a whole, the dollar continually is being debased. It's lost 99% of its value in the last 100 years. And maybe even less than that. And so it's insane to see that on paper, like the cost of eggs is up, right? And like as you are collecting your cash from your
It's
W-2
so much
job,
more than the 6% inflation that you're hearing too.
You're-
Go look at the cost of eggs. They literally tripled.
No, it's insane.
Yeah.
You basically need a 20% raise every year just to keep up with this and to be able to afford homes and properties and all these things. And it's unless you have the wherewithal to study real estate investing and build connections and can get into the game. But my point is why we are doing all of this is to say we are just hedging against the dollar debasement. And we are, time after time, you've seen, over the years, the winners of this game are the people that put their money in income producing assets and assets that appreciate over time. For us, the winner, I mean, it was chosen by the government, but Corey and I also decided this, it's real estate. And that's what we're sticking to. And that's our vehicle for success. So the money that we have coming in, and we say we have this money in the ground, though I'm not multi-millionaire from cash flow specifically.
Yeah.
Having all this money in the dirt sometimes feels like, damn, it's all in the dirt. We got to it just feels a type of way, but I know it's for the greater good. And we talk about planting these seeds, and you had a great analogy with all these trees and all these seeds that we're planting, a quick refinance, a sale of a property, it gives you 2 to 3 times what you're making in your salary in one deal. And so it's insane the flowers that can bloom or the plants that can bloom from planting seeds early on. And I think that's what we just want to get across here is like the earlier you can get in the game, the better off you'll be. I don't see this changing anytime soon unless the entire monetary system changes, where you need to get your money in the ground. You need to get your money into income producing assets that are going to appreciate over time. So that way your hard earned time, energy, blood, sweat, and tears isn't just sitting in a bank account and draining your cash on a daily basis. You have this thing growing in the background. If you own the property 100% yourself, you decide when you sell it, right? So a lot there. I don't know if you have anything to touch on, but I just wanted to, I feel like people to really relate to people. Like the struggle is real in 2025 and we understand it, and it's hard out in the streets.
It is. It's hard. And that's why, me leaving my job in the past year, that hasn't been like super easy active income wise too. Like it's been a shift. Like, I was going from making like cushy, if you will, 6 figures plus to like trying to build our business. And like, even though we do have this real estate portfolio that's building in the background, it's like we still have to have active income. We're not living off of the real estate. Like people need to hear that. But if we didn't start with the one house hack, none of this would have happened. Like zero. So just think about starting. You got to start this today. Like you gotta be confident, make your first deal. And if you need help with that, we literally teach people how to do it. Like, because I know how much a mentor and how much somebody with having my back in the beginning has helped me accelerate the process and to get to the next stage of life that we're at. But we're still building, we're still doing this thing. I'm really curious to see where this goes. But the last thing I'll leave you with is that the real estate is amazing, but it's not delayed gratification until you die, right? Or you'll never get to understand or have the fruits of your labor. Like we're selling a property so that you can buy a primary residence and I can pay for my wedding. Like I'm 34, I don't have a dream home. Like I'm not in a position where I'm like doing all of the things yet that I actually want to do. And I think that's important for people to hear from us is like, I have a great life. I do what I want when I want as an entrepreneur, but the future life that we still want to live hasn't happened in 6 to 7 years. So we're still getting up every day and going and running on the treadmill, if you will, of trying to make this thing happen. So I don't want anyone here to feel like they're behind. Like we still feel like we're behind in some ways, but I just wanted to give you the portfolio evolution and see where we are today and how it's grown and where it's going. And then we'll let you know when it gets to a point where we're like, this is awesome. This is amazing. Like it was all worth it. And it already feels like it is, but this was cool. So I wanted to give you the full breakdown. And hopefully this was helpful for people to frame like where they are in their journey and how you can get to the position that we're in and then surpass us. I hope we see people surpass us too.
Yeah, I think you nailed it. Really, the just the last thing I want to say is we stacked this one small step at a time, one deal at a time. And, we had to fight the inner demons inside in the battle between our ears a lot. You have to say no a lot of times. You have to say yes a lot of times. You have to make hard critical thinking decisions on a daily basis. And you're looking out for the other person across the room, and we're taking this thing down together. So my point is, all you have to do is start. If you've been listening to this podcast and you've listened to 50 plus episodes, you have the education you need. You've read the real estate books. You've listened to the other podcasts. You know how to analyze a deal. You just have to start making offers and commit to doing one. The first deal is not going to be perfect. It's not. If you need help getting that first deal done, drop us a DM on Instagram. We will help you do that. If you feel like you need that extra angel on your shoulder saying, hey, that deal looks great, or let's take another look at that, we're happy to help you. But I really just want to get across here. This episode is to show you what's possible. You stack one deal at a time. And, in the next 5-10 years, your life could look completely different. So with that, we hope you liked the episode as much as you liked us going there. We enjoyed going down memory lane, and we'll see you next week.